Mr. Thakur, good morning. It's good to have you with us. How have you been?
Thank, thank you. Everything is fine here.
I hope family, work, people at work, everybody is safe during these difficult times.
Yeah, by grace of God, everything is fine. Though I've been hearing so many bad news, but as far as we are concerned, our family is concerned, everything is fine here.
Wonderful, wonderful. Mr. Thakur, this was a discussion that I was looking forward to, right? I think public markets, they've continued to outperform everybody's imagination, right? I think, there's this renewed confidence which is there in public markets, right? I think this is something that we've not experienced before, right? A lot of people continue to question that, but I think it was time that we started to believe in our markets, right? And the ability and potential of promoters, founders, entrepreneurs in the country, right, who've been extremely resilient during very, very difficult times. So, before we dive into the discussion today, I would love you to take us through your journey. You've had a phenomenal journey. You've been part of public market spaces for a very, very long time. So why don't you tell us a little about yourself, and then we dive into a very, very interesting topic at hand today.
See, being in the capital market is always interesting. You see a lot of events happening across you, and of course, you see finances coming out, going out. People making wealth. There have been during my journey, I have seen many companies starting as small and become large conglomerate. And today, if you see BSC market capitalization, it has already crossed $3 trillion. So being a part of this stock exchange have always been very exciting. Being in the capital market where you see a lot of volatility, lot of financing, lot of new products over last 10, 15 years that have become the part and parcel of the capital market. So it has always excited me. And let me tell you, as far as I am concerned, for last 27 years of my career, I have spent all these 27 years into the capital market, starting from a stockholding corporation of India way back in 1994, and now at the helm of affairs of SME and the startup platform. So by grace of God, it has been challenging, at the same time very exciting market with a lot of things happening, and all these things have been exciting. You are at the center of all these things happening, whereby you are seeing that a lot of focus has been there into the capital market, various media channels, etc. Everybody is taking, noticing that what are the developments happening. And let me tell you, all the regulators, the government, the stock exchanges have taken extra measures to ensure that this market should run smoothly and efficiently and keep on growing. And being a part of that, institution, it has always excited me. And whatever I can, I have tried to contribute to the development of the country and to the economy.
That is fantastic, Mr. Thakur. That is absolutely fantastic, right? And when I'm actually listening to it, it just gives me goosebumps, right? Because in my mind, I am kind of picturing how markets were in 1994, and of course, from there to moving into a completely digital environment. I joined the industry in 2006, 2007 onwards, right? And my first stint was within the banking space, where we were essentially participating in public markets, right? And what times were those? From that to where we are today, I think it's absolutely fantastic. And you've been a witness to it much up close and personal. So I can only imagine the kind of excitement that you've been through, and the kind of value creation that you've seen. I think there are very few who can really talk about being part of that process and seeing that very, very closely.
Yeah, I have seen both the extremes of pessimism and the extremes of optimism. And the pendulum has been swinging between both the sides. Okay, I have seen the smiles on the face. I have seen the fear on the faces. I have seen the grief on the faces. So all these things we have seen, and somehow we have tried to ensure that the markets keep on moving efficiently, effectively, and more wealth creation keeps on happening. Employment can be generated in this country, and that is very much important. Okay, wealth gets created over the time, but at the same time, we need to ensure that it also contributes to the economy and the employment of the country.
Sure. So we're going to dive into our topic today that we have at hand, right? And that is discussing the possibilities of discussing various aspects of the SME exchange the initiative that you lead, right, and the thought process behind it, what's happening, and the startup ecosystem, right? Because startup ecosystem is something which is shaped up beautifully in last few years, and I think a lot of businesses are at a point where they're looking to get listed, right? So I think this is a discussion that I've been looking forward to. So my first question for the day today is, and I'm going to start with COVID because it's been an inflection point of a certain sort, right? Because this is something which is going to change how we consume, right? This is going to change the consumer appetite, right? But how has COVID-19, how has the pandemic been for change the public market, right? Structurally, perception wise, how has this changed, right? The markets for people at large.
See, when the COVID, came for the first time in the month of March 2020, it has created a lot of uncertainties in the market. People were not sure that what is going to happen. Then there was a strict lockdown that has been declared by the government. And because of that, we have seen disruptions in both demand and supply. We have seen a lot of equity outflow out of the country where the FI have taken money from the market, and suddenly the market has crashed. And we all know that how much it has impacted the first 6 months to the large corporate as well as the small and medium corporate. The first quarter we have seen the GDP falling by 23.6%. Once the economy starts unlocking, we have seen the recovery in a very fast pace, and by the end of this financial year, we have reduced it to 7.3%, something like that. And the next 2 quarters, when the economy unlocked, we have seen a lot of demand coming into. We have seen the highest GST collection in last 3-4 years, and everything has started moving very fast. That the promoters, and as you have rightly said, their resilience can't be doubted, and they know how to manage the things. But of course, a lot of company got impacted, and government and RBI has flung into action, and they have tried to inject as much liquidity as they can into the market. Government has also come out with 3 lakh crore rupees packet for a small and medium enterprises, and that has helped a lot these companies to address their issues. So I think if you see this COVID period, we have a lot of pessimism at some point of time. But since May onwards, if you talk about the capital market, we have seen a huge inflow of FI funds into the market. And in this financial year itself, as far as FY21 is concerned, the FI have pumped almost $37.6 billion into the capital market. Not only that, even if we see the mutual fund, AUM, asset under management, it has also grown by 41%, and almost, I think it has the AUM, asset under management, is almost 34.3 lakh crores. So I think, we have seen a lot of liquidity come into the market. At the same time, if you see the number of investors who got registered with the capital market has touched almost all-time high of 70 million. Okay, we have never thought of, in last few years, we have seen 3 crores of investors, that is 30 million of investors. But in this COVID period itself, we have seen this much. So, a lot of things started happening, things started adjusting, money finds its way. Okay. So, things started adjusting, and after that 3rd quarter, 4th quarter, when the results of the companies started coming very good, people confidence starts increasing into the market, and we have seen more and more liquidity coming into the market. And therefore, if you see, first time in the history, the market has moved from 25,500 to 52,500. It's all-time high.
Absolutely.
But many of the time, many people, many analysts say that this is a bear trap and so on and so forth. And people get scared. But this is unprecedented. In fact, if you see the market capitalization of BSE is among the top 10 countries in the world. Okay, it is above $3 trillion. If you see the forex reserves, it is almost $605 billion. Again, it is one of the top 5 countries in the world. So a lot of things have happened. which
Right.
are very much positive. But yes, some negative things have also happened. When
Right.
everything got stuck, there was a liquidity constraint into the market.
Right.
The MSME felt it very bad because they have got less working capital cycle. There is a less cash there into their balance sheet, and therefore they are unable to manage. But
Right.
once RBI has started reducing the interest rate and injected liquidity into the system, the government has come out with moratorium plan. And all those things have started helping SMEs. This 3 lakh
Right.
crore rupees that government has come out with change in the definition of the MSME sector has also contributed to the growth of these sectors. So I think overall, if you see from the capital market perspective, yes, investors have made good money. There has been a lot of FII inflow into the market. Mutual fund AUM has soared 41%, again, unprecedented. So I think, and then it has been a very good result session for the corporates in third and fourth quarter. So I think all these things have helped the index moving up and investors making good return into the market. Sure. And market capitalization touching all-time high. And when I'm talking about the growth into the capital market, right. It is not it is not only related to top 50, 100 company or one particular sector, but it is across the board. Right. So across, if you talk about top line counters, they have performed well. Even big companies, they have performed well. The mid-cap sector have performed well. Right. The small sector. So across the board, all the companies have given very good returns to the investors.
I think, sir, this has been a phenomenal time, right? I think we've not. I've been in the markets for a reasonable amount of time, and I think what we've seen in the last 1.5 years has been absolutely unprecedented. I completely agree with that. Mr. Thakur, 2000, late 2000s, right? Essentially. Participation of savings was just about 3% in equities, right? As an instrument, which is very, very low, right? As soon as you start to compare it with, more mature markets, the US, European countries, and all of that, right? This is a very insignificant portion, right? Do you think, the last few years, and particularly around COVID, where, there is a lot of disruption which has happened, which essentially meant that a lot of companies will have to now adopt to digital infrastructure, right? In terms of, say, their transactions, in terms of their internal systems, in terms of the external systems, in terms of availability of financing, so on and so forth, right? So a lot of what the inefficiencies that existed in the offline ecosystem have now kind of been moved to a digital ecosystem, which makes it a little more transparent, right? And of course, with a lot of advocacy that has happened by regulators, by a lot of other stakeholders in the ecosystem, and plus, of course, education, right? Do you think this has contributed to a very different kind of a confidence in the market around the last, say, 1.5 years, around the COVID times, where people got an opportunity to understand what was happening? They were more confident about what was happening, and thus the participation increased. Do you kind of agree with that as a thought, right? Of this increase and participation improvement that we've seen in the last 1.5 years?
See, there have been a lot of developments. As I have already told you that, investment has been direct and indirect. Right. For example, retail investors keep on adding into the market where they have started investing directly. Then right. We have also seen that, money flowing into the mutual fund industry. Right. And through that also there have been investment into the market. Right. But still, I feel that there are more household sector investment that should come into the market. Still, it is somewhere around 8.5%. Right. Okay. So I think it needs to grow if we compare with the developed country. The only issue is that financial literacy. Once the financial literacy in our country start improving, you will see the young population start moving towards the capital market and they start investing into the market. And right. That will create a lot of balance into the market, whereby if there will be some outflow of funds, then the funds of the mutual fund and the retail investors will use to balance the market. Correct. So those things can start happening. Of course, in last few years, as you have rightly said, there has been a lot of innovations, digital sectors and all those things we have seen. We have seen brokers, connecting everything through the systems, whereby, right. Payment, settlement, shares movement, everything has been connected. The investors don't have to go to 3 to 4 places for managing their portfolio. So I think a lot of innovations have started happening into the financial market. In fact, if you see the broking industry, it has also got converted into a typical fintech company, whereby everything the investors get under one roof. They don't have to move here and there. And that has given a lot of comfort level to the investors. Besides that, a lot of transparency has come into the system. Lots of checks and balances have been, brought by the regulators, which gives a lots of information about the companies to the investors, and investors have become more powerful and intelligent. And they can, they can judge on which companies they should invest and in which company they should not invest. And besides that, stock exchanges also develop a lot of awareness program. Digitization, let me tell you, as a stock exchange, we have digitized the whole system long back when people were not talking about digitization. But in last few years, I think the push on digitization has improved, has gone up a lot. It has become now a mindset. And in this COVID era, what we have seen that those companies who were, postponing their digitization or, automation of their companies over years, they have brought it into their, companies. And this has improved their performance. Now you see there are so many software which can take care of their HR issues, their taxation, their all other things, whatever you can think of. And that have improved, and that have improved the efficiency of companies. And and that has also brought a better result, and they can connect to their investors. So I think, these are the positive aspects which we can think from digitization side or from automation side. So you can say that, this COVID has acted as blessing in disguise. Whereby, many things which the promoters, the owners of the companies were not thinking as important investment, now have started thinking it as an important investment, and it has yielded very good results for them.
Mr. Thakur, I have had the opportunity of knowing markets much more closely, right? And while we've started to talk about fintech, right, as a and the boom around fintech in last few years, I think the broking industry has been raving about a lot of these things and has been working on a lot of these changes for a very, very long time, right? So I think I can definitely say with a lot of confidence, right, that I think broking industry was essentially the pioneer when it came to digitization in the financial sector, right? In terms of settlements, in terms of connectivity, in terms of the margin availability, and and the automation around it, right? I think that particular piece has been done beautifully, and even the regulators for that matter. I think the intervention that was there, this was very, very seamless, very smooth, and I think you've been the champions of this, of the fintech boom in the country in a certain way.
I personally feel that we all are fintech. See, the thing is that there are some buzzwords called startups and fintechs. These are buzzwords. But if you see, broking industries have been fintech for last so many years. 10 years. When you talk about digitization or automation, we have digitized the whole and automated the whole system, whereby there is no need to come to the stock exchange, do the clearing and settlement activity. The system take care of everything. So there is minimum physical intervention required or any physical touch required. So I think a stock exchange itself has automated itself. Like fintech companies, as far as brokers are concerned, the whole system is as good as fintech.
Absolutely.
So whether you tell them or not tell them, you can think that it's more like a fintech company also. And then there are various other transformations that keep on happening. The systems keep on happening, and then new products has come into the system. Gone are those days whereby you can talk about equity or debt. Now you can talk about commodity. Now you can talk about currency. BSE has got very good mutual fund platform. Whereby sitting in the home you can buy mutual funds, or you can redeem your mutual fund units. So all those facilities have become seamless. Okay,
Absolutely.
so new products are coming. There was a time when we have got monthly settlement, 15-day
Right.
settlement. Now we have rolling settlement, and that
Right.
also we have minimized it on T+2 basis.
Correct.
Okay, so everything is automated. All the systems are automated, and that's why you just see around 15 years back, the total turnover in the market was normally used to be 4,000 crores. Now, if you
Right.
take equity, derivatives, everything together, it is somewhere around 25 lakh crores. So everything has changed. All the, the whole game has changed. Turnover has gone up. Systems are in better place. There is no disruption as far as system is concerned. If you see BSE, even in the COVID time, we have never observed any single disruptions.
I agree.
Everything was going on very smooth.
Right. Mr. Thakur, coming specifically to the SME exchange, right? You've been a champion of this particular platform at BST. You've been advocating it for a very, very long time, right? And I think the need for SME listing is also, become very critical, right? Because that is a very strong, significant way of raising capital for expanding your business. So, for entrepreneurs, this comes in as a massive support play, right? I would want you to touch upon briefly on what does BSE SME Exchange stand for? Why was there a need to create a separate platform? If you could just run us through that briefly, and then of course we cover the various other aspects of this particular initiative at BSE.
So, if you see BSE as a whole, we are almost 146 years old organization, and there was a time any small medium companies can come and get listed. If you see Reliance or before Infosys, all those companies, when they come on the stock exchange, they were a small company and slowly transformed to large corporates.
Right.
Earlier, the compliance requirement and other requirements were not so stringent. So they were able to comply with all those regulations and all those compliance now. Slowly and slowly, because of some ill doings by some people, we kept on making the rules, the guidelines, the compliance norms very stringent. And then we have also created a upper eligibility criteria, some stringent eligibility criteria for the companies to get listed. And because of that, it became very difficult for the small and medium enterprises to get listed. Because, if you see in our country, normally the promoters don't like to do a lot of compliances. Okay, they feel that they are already, or I would like to say that they don't have that much of bandwidth to do so many compliances. Okay. So, and at the same time, because of the, some stringent norms for getting the companies listed, it was also becoming very difficult for a small and medium enterprise to get listed onto the stock exchange. So, there was a committee was formed way back in 2010 under the principal secretary at that point of time to frame the guidelines for the upliftment of the small and medium enterprises. And one of the recommendation of that committee was to start a SME exchange. So that report has gone to the capital market regulators, SEBI, Security Exchange Board of India, and they were requested to frame guidelines for the SME exchange. So in 2010 May, they have come out with the guidelines for getting the small and medium enterprise to get listed onto the stock exchange and about the eligibility criteria of starting that SME exchange. So at that point of time, there were only 2 stock exchanges which qualify that criteria, which have got all the infrastructure in the place to start this SME platform. So BSE being the exchange who understands the equity market very well and who have seen the development of these companies post-listing. So we have taken the initiative and we approached to Security Exchange Board of India to allow us launch the SME platform. And finally, they have given us the approval on 27 September 2011 to launch this SME exchange. And we became the first stock exchange to launch the SME platform on 13th March 2012.
Wow!
So this was the whole starting of this SME exchange. But we were very sure that if the SME has to prosper, they have to rely both on debt and equity.
Correct.
So we were seeing that as far as in India is concerned, there are a lot of small and medium enterprises, but they are over leveraged by one source of funding, that is called debt funding, and because of which their books are little bit distorted. So we thought that it's India requires at least 1,000 large corporates of, I can say even 5,000 large corporates over the years to cater to the need of the young population who can get the job. And therefore, we thought that it's better, let us start SME exchange, request the SME promoters to get listed onto the SME platform of the stock exchange and raise funds. So on this SME platform, there were two things have been done. One, the eligibility criteria has been kept minimal.
Okay.
And number two, the compliances have been also kept minimal, so that these SMEs don't have to invest a lot in doing compliances, or they get scared of doing compliances.
Right.
So both these things we want to avoid, and take out the fear in the minds of the promoters that listing requires a lot of compliances.
Right.
So eligibility criteria we have kept minimal. What we said that if your post-issue face value capital is below 25 crores, you can get listed onto the stock exchange.
Right.
Number two, the company needs to be in existence for a period of 3 years. Number three, it should have operating profit in any one of the 3 years. And number fourth, it should have net tangible asset of 1.5 crores. So these are the four criteria that we have conceptualized in this SME platform. And we request the companies to get listed onto this SME platform. Not only that, again, the compliances, we were knowing that these companies don't have the bandwidth to do the compliances. So we have reduced the compliances, we have relaxed the compliances. And what we said that you have to do half-yearly compliances. If you see the compliances on the main board, it's quarterly compliances. Here, what we said that you have to do half-yearly compliance, means you have to file half-yearly results. And again, the half-yearly results need not to be audited. Without auditing, with limited review, you can file with the stock exchange. And we have also done away with publishing it into the newspaper. Only thing what they have to do, they have to upload it on our system so that we can put it on public domain, and they have to put on their website, that is company's website, so that investors can look into that. And the second thing what we said that yearly you have to file your audited results. So, so we have relaxed the post-listing compliances as much we can.
This is very, very relaxed over companies that we have in the on the marine browser listed. This is so much more easier than that. I mean, that's a very, very difficult one, right? As soon as you start factoring in the conditions and the compliances that they have to maintain, this is so much more easier.
This is very much, this is so much easier. Not only that, even the listing process, the listing time is also very less. It's a very efficient way to get the company listed, because here the stock exchange is the approving authority. It doesn't go to SEBI for approval. So what we have seen that it takes maximum 3 months for the promoters to get listed onto the SME platform of the stock exchange. Not only that, we also want that over the time, if the company feels that they have become big or they are in a position to do compliances of the main board, they have been given the option to migrate onto the main board of the stock exchange. And for that, they have to meet 2 criteria. Number one, their post-issue face value capital should be more than 10 crores. And number 2, the market capitalization should be minimum 25 crores. So these are the 2 eligibility criteria that they have to fill. And the third one is regarding compliance, that they have to take 2/3 of non-promoters approval. So if they have taken 2/3 non-promoters approval and they are meeting these 2 eligibility criteria, they can migrate to the main board of the stock exchange. So this seamless transmission process is also given to the SME companies who over the years have grown. And this is very cost-effective way also to later on move to the main board of the stock exchange.
Very interesting. Mr. Thakur, what are the current statistics like? So the SME exchange has been functional for last 5-6 years. There's a lot of action which has happened under your leadership in the last couple of years, right? I think there's a lot of visibility and there's a lot of awareness that you've created particularly, right, about what is happening, right? So what are the current statistics of the SME exchange? I mean, how many companies are listed? Liquidity is a very, very big concern, right? As soon as you start talking, I mean, not just say on an SME exchange, but even when you're talking about the main browser, right? There are, of course, the blue chips do very well, mid caps do a reasonable volume, right? But as soon as you start looking at lower value stocks, right, liquidity becomes a big, big concern, right? Are those challenges tackled at the SME exchange? If you could give us a little bit of a sense around that.
See, as far as statistics is concerned, we have almost 337 companies listed onto the stock exchange.
Okay.
And besides that, 60 companies are in pipeline.
Okay.
The pipeline is full. We are expecting many more SMEs to file the prospectus because it takes time to convince the promoters to get listed onto the stock exchange. So, but still the pipeline is good enough. Though we, our wish list is that every year thousands of companies should get listed onto the SME platform, the stock exchange. But yes, it's difficult. But these 337 companies have raised almost 3,500 crore rupees.
Wow.
And the market capitalization is 27,500 crores.
Right.
So funds, good amount of funds have been raised, and the market capitalization is also good. And these 337 companies are from 17 sectors. So they represent 17 sectors. So it's not that a particular sector, because if you see the international SME exchange, there the companies from specific sectors got listed onto the SME platform. Ours not a specific sector. It's across various sectors. The companies got listed onto the SME platform. So that's the one thing as far as statistics is concerned. Second question you have asked about the liquidity. So on the SME platform, there are two things. One, the way the guidelines have been made is in this way that informed investors should invest into the SME companies. So minimum investment ticket size is 1 lakh rupees. Okay. So if any investor want to invest, he has to invest minimum 1 lakh rupees onto these companies, or multiple thereof, maybe 2 lakh, 3 lakh, like this. So when I am talking about informed investors are the ones who understand the company, who remains the investor, not a trader, who starts doing a lot of trading on daily basis. So like that. Still, we have the concept of market maker on the SME platform. So the job of the market maker is to give two-way quotes. So if an investor want to buy, he can buy. If an investor want to sell the shares, he can sell the shares. So to ensure the liquidity, we have this market maker onto the SME platform. Okay. Now, when you are talking about that we are not seeing liquidity, the reason being is that these investors are not day traders. They remain with the companies for a longer time. And, once their wealth goes up, then only they think of exiting into the company. Or maybe once the company migrate onto the main board, then they can think of exiting from the company. But still, the liquidity has been taken care by the market maker. So that's not an issue on the SME platform is concerned. Yes, post-migration onto the main board, still we have started seeing the liquidity happening onto this SME company. But for that, all the participants have to come and they have to ensure that they should start investing into the company and they start trading and all those activities. But as far as SME platform is concerned, we have not find it as a concern, and as far as liquidity is related.
No, I think that
so as till now, what we have seen that the SME market is performing very well. In fact, we have started SME IPO index in December 2012 with 100 as base. Today it has crossed 3,600. So if you see the index, it has also performed very well. So all those things, as far as liquidity is concerned, investment is concerned, we feel that the SME platform is more from the investment perspective rather talking about the liquidity things. Yeah, right.
No, I think that kind of makes a lot of sense. I think that sensibility is very important, and I think early stage companies cannot be exposed to those day-to-day vagaries, right? Of how this and the pressures of what we see on the main browser, right? So
if you see all the companies which have become large corporates today, on the initial days, in the initial days of listing, even those companies don't have that much of liquidity. But once they have crossed minimum market capitalization, then we have started seeing the liquidity building up in those companies.
Interesting. Mr. Thakur, tech companies have a particular requirement, right? And there are a lot of companies, I mean, the data is out there, right? And there are agencies like Startup India, Invest India. The government of India has been, kind of promoting the startup ecosystem, right? Apart from, of course, making the SME market and MSME market very, very strong. Do you think, and you've championed the cause, right? In terms of establishing an SME exchange and having these companies to come in and and bringing investors to come in and invest in these companies, right? Do you think there is a need for a separate, a similar separate platform for technology companies like what we have in the US, right? So there's a Nasdaq which we have on equal lines. Do you think there is a need for that because technology companies have a certain behavioral pattern, right? There are companies which have an alternate currency that they deal with, which is that of engagement, right? And revenue is something that kicks in over a period of time. Do you think we can have an exchange which is essentially designed for tech companies, keeping in mind their requirement, keeping in mind the kind of scale that they're kind of building? Is that a possibility, or do you think we are a little away from that, given that we're still a market which is not as mature? We're still building our depth and building a foundation of equity participation as percentage of savings. Do you think we are a little away from that right now? While there could be a need, what are your thoughts about these two aspects?
As I have said that in last 10 years, the financial market has depended a lot. Sure. 10 years back, we have never heard about PE/VC funding, etc. Now right. We are seeing that PE/VC funds have started coming, and they have started investing in these technology companies where they find a lot of potential, and that's how the Flipkarts or Zomato or there are so many companies which have got converted into unicorns. Okay. Now, that is one space. There is another space which we as a stock exchange can launch for the startup, because in India, we have almost 40,000 startups, and not every startups get funds from the PE/VCs. So we should start some platform through which the other startups also can get funds, especially technology related companies. Right. So in 2018, we have come out with the guidelines for this startup platforms. Okay. And as per those guidelines, what we said that any startup which is into technology space and want to get listed onto the stock exchange for raising funds, they can get listed on our startup platform. So we have got BSE Startup Exchange, BSE Startup Platform for this startup company. Wonderful. So there are three eligibility requirements there also. Number one, the startup should be in existence for minimum period of 2 years. Okay. That's number one. Number two, the startup should have positive net worth. That's second requirement. Third, they should be registered with DIPT. Okay. In case they are not registered with DIPT as a startup, then their paid up capital should be minimum 1 crore. Okay. If they are meeting these three eligibility criteria, they can come get listed on the startup platform of the stock exchange for raising funds. They can come out with an IPO and they can raise funds. So for all practical purpose, the startup platform was launched in August 2019 when two startups from Maharashtra got listed. Okay. And after that, in 2020, again, this COVID has come, right, which tried to slow down our process. But still, let me tell you, even the last 1 year or so, we have been able to get 8 startups listed on our startup platform. So total 10 startups got listed. They have raised almost 36 crores, and the market cap has gone to 100 crores. Wonderful. So we are trying to nurture the more and more startups on our startup platform. And let me tell you, these 10 startups which got listed on our startup platform, most of them are profit-making company, profit-making startups. Right. Okay. So that is the very good thing that has happened on our startup platform. It's not that they have started burning the money. They are in profit and they are listed on our startup platform. And investors can look into these companies. And if they think of investing, because their valuation is also not so huge, it's not in multiples of their top line that they have to invest a lot. But because the valuation is very sensible valuation, and that they can check and verify from the stock exchange portal. We have got a portal for that. And so this process has been started for the startups, okay, to also look to the BSE startup platform, get themselves listed on this startup platform, raise funds, over the years and grow themselves.
Very interesting. So what are some of the key challenges? I mean, you've been advocating for this cause for the longest time, right? What are some of the key challenges? I mean, and there could be, impediments in the minds of the promoters, founders, entrepreneurs, right? Of why it should be get listed, right? What do you think are some of the key challenges? What are, say, the key misconceptions that are there in the minds of this lot of promoters, founders, and entrepreneurs that they need to that you would want to clear, for example, right? What are some of those common misconceptions, right? And why should they consider this kind of a listing? What are your thoughts about that?
Again, as I have earlier also said that the lack of financial literacy is still there. Most of these promoters are technocrats,
right?
And they might not be knowing the financial jargon. Also, there is a fear of compliances. Okay, that they have to give lot of time to ensure that the company is doing all the compliances. Otherwise, they will be subject to some harsh penalty and all those things.
Right.
So that's somewhere in their mind, which is stopping them to come and get themselves listed onto the stock exchange. In last 7 to 8 years, let me tell you, I have done 2,200 seminars, 150 webinars, and met almost 35,000 to 36,000 promoters. We as team, we have met. Still, we have got 400 odd companies which have come for listing. In fact, it should have more than 1,000 companies which should be listed. So, and the main fear is in the minds of the promoters is related to compliances that, if they get listed onto the stock exchange, they have to do lots of compliances. So that fear is there in the minds of the promoters, which is stopping them to get listed. Also, sometimes they feel that, why I should dilute 25% to 30% and make someone partner of my company who comes and sits on my head. Okay, so somewhere they think that, giving 26,000 to a single person, though these shares they are giving to many investors, but in their mind it is there that they are giving 2 to 3 investors who will, interfere in their businesses. So these are the main issues that are stopping them or creating, hurdles or, bottlenecks. And therefore they don't come and get listed onto the stock exchange. So I think these things, they have to come out. The financial literacy needs to be created in the country. People need to understand. Equity has not been properly understood in our country. They did understand because banks are everywhere. A stock exchange is still a very small portion of the people who also come for investing. The promoters don't know how to capitalize the capital market for raising funds. Still, that concept has not been well received by the promoters. But once those things will be understood by the promoters, they will come and get themselves listed. But as of now, this is the main reason for them not coming onto the stock exchange platform.
Mr. Thakur, I think what you mentioned, I think it makes so much sense, right? And I think it's a certain fear that founders, and I completely agree. I think equity is a misunderstood instrument, right? And I think also the fact that we constantly need people to sort of. I think we're people dependent when it's about investment, right? We want to piggyback other people, right? We're not necessarily we don't have the foundational understanding of equity as an instrument. I think which is so much more important. Like you highlighted, I completely agree with you, right? So what is the process of this is particularly for startups, right? And there are, like you said, there are many startups that are not necessarily, for example, going out and raising capital from investors, right? And have little choice but to turn profitable, right? And this is a brilliant mechanics for them to go out and raise capital, right? And have more people to come in and be part of the growth that they're building, right? And eventually move on to the next layer of the main browser. So what is the process? How efficient is the process? How quick is the process? If any founder wants to, consider moving in that direction. If you could run me through that.
The process is very simple. Let me tell you, both on the SME platform as well as in the startup platform.
Sure.
What we have done, we have requested our merchant bankers to handle the promoters, because most of the time promoters, don't know how to do documentation, paperwork, and all those processes. Right. So the merchant banker and his team, guide the promoters to do all the paperwork, documentation, etc. So only thing what the promoter has to do is to sign the mandate with the merchant banker, and negotiate with him the fee structure and all those things. And once everything has been settled, once the mandate got signed, then it's the job of the merchant banker to do all the paperwork, documentation, etc. They file the prospectus with the exchange, and then they raise the funds for these startups and the SME promoters. So very simple process. They don't have to deploy their time and energy. They have to just depute one person in their organization who can do paperwork with the merchant bankers, and the rest, all other things, merchant banker will do. And they will ensure that the company, the prospectus, etc. of the company should be filed with the stock exchange. They get the approval for the promoter, and then they come out with the IPO for these startups and the SME. So once the funds comes into the company, after that, again, the process is being done by the merchant banker. And on the 6th day, the company get listed onto the stock exchange and being traded.
Right.
We are using the same stock exchange platform for the SME companies and the startup companies. So these companies also get the same exposure as the large companies get.
Right.
Okay. Even the investors don't have to do anything if they have the bank, if they are registered with the stock exchange and the members of the stock exchange. They have got demat accounts, everything. Then they can also trade on these SME scripts and startup scripts. So no investment in the infrastructure by either the member or the investors. If they are registered, if they can trade onto the stock exchange, they can trade in these companies also. So we have ensured that these companies should also get the same exposure as the large corporates are getting. And all this process for SME, the process is of 3 months. For the startup, the process is of 2 months.
Wonderful. That is very efficient.
That's it. And that's it. And in this after 2 months, the company get listed and started trading onto the stock exchange.
Very interesting. Mr. Thakur, there are a lot of mutual funds, there are a lot of PMSs, there are like a lot of players, right? Intermediaries who participate on the main browser, right? Within BSE, right? Are there initiatives where you are engaging with such institutions and kind of engaging with them, collaborating them, convincing them to come in and participate on the smaller browsers as well, where they could bring in a certain portion of the capital, which serves as a growth capital for some of the early stage businesses that are getting listed on the platform. Is there a conversation that is happening on those lines?
Yes, those conversations are happening. In fact, before this COVID, we have arranged 2 seminars for these SME companies with the institutions and the mutual funds. Even high net worth individuals, we have called for the meeting. We have engaged an agency for organizing the meetings with these institutions, these mutual funds for these SME promoters. So there are some developments. We are trying to create as much awareness as we can. In fact, recently a company got listed where 50% of the funding has been done by the QIB. Okay, so institutions have invested. So if the companies are good and if it is properly marketed to this institution, I am quite sure the institution will take interest and invest into our company. In fact, there are other companies also where we have seen that institutions have invested in those companies. But yes, of course, we want that more and more institution and mutual fund participation should happen in these companies. The big and large individual investors, if they are there and if they find that these companies have the potential, we want those people also to come and invest into those companies. So, but we are trying to engage these people, and of course, BSE has taken a lot of initiative to engage these people, showcase them these companies, so that they can think of investing into these companies.
Very interesting. Mr. Thakur, we're towards the end of the conversation. It's been a fantastic conversation. So, 2 or 3 advisors for founders, promoters, entrepreneurs. SME startups, I'm not going to segregate, but in general, your advice for promoters, founders, and entrepreneurs, business owners who are building for a new India, right? What are your top 3 advices, right? And why should they prioritize, being in public markets, right? Why should they make a lot of household, or let me put it this way, right? Individuals and household income to come in and be part of their growth story? Why do you think it's important, right? Just your 3 or 4 points your guidance on that bit.
See, my personal feeling and what I have understood in so many years from the market is that if a company has to grow, they have to use both the pillars of financing.
Sure.
That is debt and equity.
Right.
One thing which is common among the large corporates across the world is equity funding. They have got listed onto the stock exchange. That's how they become large corporates. We can't grow on one source of financing. The promoters must need to understand that one source of financing can never take you to the big board or to the large level, or convert them into a big company. Okay, for that they have to take the help of equity market, and both equity funding and debt funding are very much required for the company's growth. So that the promoter need to understand, because equity, what does equity does? It balances the balance sheet. Okay, most of the time when you take only one sort of financing, your balance sheet becomes distorted. But when equity and debt both are in right proportion, it gives it gives a balance sheet a healthy look, and then it creates a trust into the minds of the stakeholders, whether it's bankers, whether equity investors, whether their clients. All those gets trust for these companies. I have seen even when the company gets listed and when they showcase themselves as listed company, they get more business. Even their interest rate gets reduced. So my suggestion to the promoters is that SME platform is a great platform. It teaches you how to do compliances. It also makes you feel, it also removes loss of myths from your mind that, okay, doing compliance is very difficult. It also gives you exposure to the greater audience, to the larger audience, so that they can understand your company, they can have trust in your company, they start investing in your company. So these things are very much required for the growth of the company, and my suggestion to the promoters and promoters that they should look to this public platform for their growth. So that will be the advice, and only thing is that we have made the compliances very minimal on the SME platform. And so please get yourself listed on this stock exchange. As far as we are concerned, BSC is concerned, we will give you red carpet welcome. We will we will support you. We will help you. We will advise you also till the time you are under the regulatory framework, and we will be happy enough to see your growth on our stock exchange. Once you become large corporate, you have also been given the opportunity to migrate onto the main board of the company seamlessly and keep on growing further. So I think that will be the advice or suggestion to all the corporates who are listening you to help themselves into the growth trajectory.
Mr. Thakur, thank you so much for taking the time out. It was a pleasure discussing all of these aspects with you. I mean, I have a lot of questions. I can tell you this, right? Unfortunately, we have paucity of time, and I'll have to bring this session to a close. But we look forward to having you with us very soon across some of the other conversations that we're doing around listing, possibilities of listing, possibilities of alternate financing, for early stage businesses, right? Profitability, we believe, is very, very important. I think businesses have to think profitability, because not everybody is going to get funded to support the losses, right? Thus, businesses need to become independent, right? And I think that has to be at the DNA of the organizations. And we thoroughly believe in that entire bit. And yes. So I think with that, sir, thank you so much for taking the time out. It was a pleasure to have you with us. Look forward to having you with us soon.
Thanks. It's a pleasure discussing with you all these various aspects. Thanks a lot.
Thank you, sir.